Welcome to the CFA Society India podcast, where society members engage in conversations with industry experts to bring you unique insights. This podcast represents the views and opinions of the originally featured speaker and is posted with their express consent. The podcast is meant for educational purposes only. It should not be construed as research, recommendation, solicitation, or investment advice by CFA Society India. This episode is from the CFA Society India archives. Now, let's dive into today's episode.
It's an honor and a privilege to be part of this event and also interview Shri Govind Parikh, who's one of my mentors and role models. I'll briefly introduce Govind Parikh. So he's a chemical engineer by profession, but destiny had plans that he got into investing right as his first career. So I would not hesitate to call him the Warren Buffett of South India. So he's extremely long-thinking, quality-oriented investor and has achieved very well in spite of being a kind of a boring investment style. He has coined investing mantras, I would say, called as sleeping point investing. It means we'll understand more about sleeping point investing. And he has something very, very powerful called as bear market buying power. We'll also understand more about what's this bear market buying power. He has two very, very smart sons. He's an avid golfer, so that's very interesting. Ashish, his first son, is an accomplished techie himself, based in Bay Area in US, and has over 24 or maybe more patents to his name, Ashish. Chinmay, his second son, is part of Chennai's investing community, a close dear friend. I think he's around here. He's a alumni of Carnegie Mellon University and is now actively involved in managing the family office. And Govind Bhai feels, and I also share, that Chinmay is probably a smarter investor than Govind Bhai himself. So welcome, Govind Bhai. Pleasure and honor to host you in this. There is a Buffett saying that be fearful when others are greedy and be greedy when others are fearful. Heard that? Sounds very simple, but it's very difficult to do. And I'll narrate an incident which I have seen with Govind Bhai exactly on this. So it was mid of March 2020. You know what happened? COVID was just about starting. And so we have a partnership and all our partners are here. So we were all confused what to do because it's a once in a, maybe a lifetime event. Markets were crashing. Of course, they were discounting the worst before as the event was unfolding. So we all went to him to seek his guidance and more than that perspective. Okay, what do we do? What can happen? It looked like everything will go to zero types. So it was trading hours and he was happily buying stocks. He said, it's a very good opportunity. He was buying. And in fact, in the middle of the conversation, he said, I've just put a fairly sizable order for State Bank. And I remember it was about 200 or 210, 220. So, or maybe lower.
Yeah.
So I want to start by asking what's the framework which makes you buy? Because most of us panic like deers in front of a flashlight. So what's the framework or the model which makes you deploy capital during that time?
Thanks for your kind words, but it's actually, to be very frank with you, there's a lot of element of luck matters, and who are all your gurus, it matters a lot. If you learned it the right way, then probably you will not go off track very easily. So my Guruji, Sri Kishan Choksi, and my uncle Naresh Khanwala, they've taught me what is long-term investing. So coming to this COVID situation, COVID was almost like a war, A war without an enemy, visible enemy, War without a single bullet being fired. And, it was also very, very difficult to see and very depressing to see a lot of people unwell and a lot of people passing away, good friends and all that. In fact, my house, other than me, everybody else had COVID, and virtually everybody had COVID. And the markets were coming down quite strongly. I mean, people were thinking that there's no end to the world. And what we were thinking, Chinmay and I, we were continuously telling ourselves that, look, valuations have come to a level which is a compelling buy situation. So we thought maybe it will stop at around 10,000. That was the bottom. So we started buying it from 10,500 downwards, 10,000. And then, as it happens every time, it started going down further and further and further. And we were continuously buying. Because it was more a health crisis, it was not a financial crisis, and there was so much panic in the market. So I told myself two things. Suppose, it's the end of the world, then nobody is there. But for some reason, the advanced countries or India, or people come out with some drugs or vaccines and things improve, then you will never get this kind of shares. And very luckily, the market also, government had also allowed a lot of companies, a lot of industries to function during lockdown period. So some of those shares those companies were doing very well actually. They are very good companies and all. But the market doesn't care. Market doesn't know anything. Market is a jungle with different people, different animals, like thinking differently. But everybody at a time wants to sell, and then so we started buying. We bought from 10,000 to up to 8,000, and then after that, we had still about 30% of the total cash left. We invested about 70%, because very honestly, nobody knew when it's going to end. So yeah, that's it. That's what made us buy.
Interesting. And what happens like these? I'm sure it happened in 2008. You buy and it continues to fall. So how do you handle that? I mean, that's because your existing portfolio is falling. What you buy is also falling.
No, each time is different. 2008, actually, we were not keeping too much cash.
Okay.
After 2008 crash, we realized that we should always have some cash with us. Okay. It's like keeping an ammunition,
Wow.
When in whatever happens. Primarily, we don't borrow and invest.
True.
So, and our liabilities are not there. So it's very comfortable to, and our lifestyle, by God's grace, even my children also, my wife and my daughter-in-law, all of them. So it's not that it's too flashy for us to keep generating more and more money. So it was okay. If market came down also, it was, at the end of the day, a paper loss. Because eventually, good companies, if India had to grow, good companies will definitely grow. They'll grow much, much faster than the others.
And will bounce back stronger.
So that is why we got.
Perfect. So let me start with your early investing career. I think it started probably 4 decades back. So how did it start? Because Chennai was generally a kind of backwater. There was not active investing research being done. It's all only centered in Bombay. So how did your investment research and investment analysis career start?
Okay. I was doing my engineering from 76 to 81. My classmate Prakash Sarog is also here. He's a brilliant student. Mm-hmm. For the first 3 years, I was also doing reasonably well in studies. Not as good as him, of course. Mm-hmm. But after that, my sister got married in Bombay in 1977. So I had gone to, I visited her, and my sister and brother-in-law, they took me to Kisan Choksi's house in the night. So before that, we had bought some shares on advice of my sister's father-in-law, some 5 Bajaj Auto and 100 shares of kinetic engineering kind of thing. Kinetic was not there, I think, Bajaj Auto and those kind of shares. So I was always interested in knowing about the market. So casually I told Kishan Bhai, that how does the stock market keeps going up and down and all that. So Kishan Bhai said, look, he told my sister and brother-in-law, you go home, I'll get him dropped. After dinner in the night, he took out an annual report of Bajaj Auto. And first he told me about the company. So this company has got 10-year waiting list. So whatever they produce, they will sell. There is no question of there any selling difficulty and all that. And second thing is, now they've got a license to double their capacity from 80,000 to 160,000 tons.
So this was the license Raj days?
It was license Raj days,
right.
you're
Okay.
right.
Mm-hmm.
So, and the news had come about 10 days back in the newspapers everywhere. And the stock also went up with the news. After that, people forgot about it. They were looking at some other thing. So there were very few people who were doing real long-term investing. So one was Kishan Choksi, another person is Hemendra Seth, Utpal Seth's father.
Oh, wow.
He was also a great analyst and long-term investor. So Kishan Bhai suggested that, he was telling me how when the capacity doubles, the profit is going to double, the stock price also double. Wait 2-3 years, but it will double. So that's how he taught me how to read an annual report. Little bit, in the initial days I didn't know much. And then, but I used to make sure that every time I used to go to Akurdi to visit the plant along with them. It was like a picnic. From Bombay, everybody used to go to Bajaj Auto AGM. And it was a pleasure listening to Rahul Bajaj and looking at the factory and all those things. Because what we studied in engineering is not, this kind of thing. So from then on, I started investing, and I then thought that I came to Madras and I found that many brokers were looking at more, they were catering, some of the senior brokers were catering to Bombay institutions and all that, mostly the institutions. And some other new brokers were more interested in short-term trading. So that's how I invested. I thought I should become a broker. And I love to read the annual report, whatever it is. Those days only director's report used to come. Now you have MDA and everything else. So that's how my interest took place in that.
Tell us about your early insights and successes in companies like Ramco Cements, or I think you had visited some factories and tried to learn businesses, which was not quite the norm. So how did it play out there?
See, initially there were two companies, Ramco Cements and LMW, Lakshmi Machine Works. So I like both the companies because the companies were so very big and strong. And I happened to see the Ramco Cement plant in 1979, I think. 77 they became dry process, and so we went and saw the plant. And the stock was available for a market cap of about 2 crores or 2.5 crores or something. And my broker told me there's a small lot available of 20 shares. So it's one certificate, not small lot, one certificate. So he gave it to me for some, $180 or something. So for 1.8 crore market
share.
Yeah, 100 rupees share for 1.8 crore market cap. And I could see that, it's very, very, very strong, efficient company. So from Bombay, Kishan Choksi and my uncle, we went and saw went to attend the AGM. In those days, the AGM used to be only even now, it's in their village. The register office will be in the village. So not many people used to go. So anybody who takes interest and goes there, management is very happy. Chairman will sit like this, in his house itself, the AGM will be conducted.
Oh, okay.
And then also, we can see the factory also. They will take us to see the factory also and all that. So, it was amazing to see this kind of company available such as low price. So that's how we bought Madras Cements. And next year, Asit Koticha and then Nemisha, all these people, they came and I used to arrange meetings with the management here. So they bought a lot of shares and, it became very popular share. ACC used to be 3-4 times Ramco Cement, and then, it became other way.
So Ramco Cements, if I hear under 3 crore market cap, which is now probably 15,000 crore, so that's like a 5,000x without dilution. Did I get the numbers right?
Yeah, but you can't take it like that.
Okay.
Because compounding also you should see.
But they haven't diluted in the journey of 20-40 years.
They haven't diluted.
Okay.
And so it's a very efficient company actually, and it came into popularity because of my friends in Bombay. All these people in Bombay.
They started taking stakes in the
Nimisha and others. They bought shares, and then it became like Kishan Choksi. So many clients were there. Everybody bought the shares. Sudhir Bhai also might have bought the shares. I remember in those days. So by the way, he's come from Bombay just for attending the meeting.
Wow. Interesting.
So that's how we invested in Ramco Cement. And also cement was becoming, more, it was a controlled commodity. Then slowly there was a partial decontrol and fully decontrolled. So it was always a logistic issue in cement. If you have in those days, if you have in a single location too many plants, I mean big plant, it's very disadvantageous because you send cement to distant places. So these guys had strategically had one plant and then another plant they put like that.
Interesting. So I'll move to your investment philosophy. It's publicly known. You have several holdings which have 5, 10, 20, 50x. It's known in the publicly shared holding. So I'm keen to know, like I personally do not have anything which is 10x, frankly. You have 50 or 100x. A lot of us have not had that. So what makes you, one, buy those multi-baggers, and two, hold on, because in between there would be demonetization, there would be financial crisis and war and COVID and whatever. So what's the framework to identify those and then hold on to them?
See, basically a couple of things. The first thing is we try to see that we invest in companies where the management is clean management and they are shareholder friendly. And the promoters also have a lot of passion, for running the business and growing well. And other thing is, these companies, they always, they looked after shareholder values and all that. And we never borrowed and invested in the market. So our philosophy is that, and we invest with a very, very long-term view, at least 2-3 years. And those days, I think if you can double your money in 3 years, it was pretty good. 2-3 years, it was good. Interest rates were also very high. So basic philosophy is that you invest for long term in quality companies and stay invested. And don't get worried about the day-to-day movement or some big crash. But keep continuously finding out what is happening in the company. Fundamentally. So I'll tell you an example. A friend of mine from Morgan Stanley had come. And he said that he wants to know about cement industry. He wants to meet Ramco Cement. I said, okay. That meeting will last for an hour. After that, what you will do? He said, no. I'm there for the whole day. I said, then you want to meet anybody else or you want to go? He said, no. We'll just stay. Then after meeting Ramco Cements, instead of 1 hour, he took 2 hours. Then he said, I want to meet some competitors. So he went to the competitors. He went to Chettinad Cement and India Cement. Then we went to the dealers of the cement companies to find out, what is happening and all that. So then he wanted to, even he spoke to one lorry transport fellow also who used to take the cement and to the company from the factory to different places. So this is the kind of research people were doing. So of course we didn't have the means also to do this kind of research, but wherever we invested, whatever news was available anywhere, we used to try to keep noting it or keep jotting it out like that. This is what Kishan Choksi told me, this is what you should do. If you see his annual report, he'll be full of cuttings and paper cutting. Those days, no internet, no tuck like that, So that is how it comes. And coming to your question of multi-baggers, see, nobody invests with a view that you're going to make a multi-bagger out of a stock.
So you don't know when you invest that it's a multi-bagger.
See, take for example, Dr. Reddy's lab. It started with a market cap of 1.1 crores. And after that, 80,000 crores. If the promoters had known that it's going to be a multi-bagger, he will not come out to public also. So what we used to do is we used to invest in companies which are very, very promising growth in the next couple of years, and companies growing at 30% kind of thing, So those kind of companies we keep investing. But sometimes what happens is if you buy a stock at 100 and you expect it will go to, let's say, 200, 300 in 2-3 years, market crashes due to some reason, Along with the good, bad shares, even the good shares will come down. Now this 100 rupees becomes 60 rupees. At that time you should not panic. In the time of it's going down from 100 to 60, you should keep on studying more and more and making sure that your conviction is right, what you bought. Nothing has gone wrong with your fundamental philosophy, to the best of our knowledge, And then at 60, you should buy a truckload of shares. Then it goes to, in 3-4 years, it goes to 300, you make a 5-bagger. So that's how you make a multi-bagger. Multi-bagger is very difficult actually.
Got it. So coming back to the original COVID buying, so that is a very contrarian investment style to bet against the market. So how does this contrarian investing work? Can we be a contrarian every time? Where does the to being with the flow versus contrarian? How do you rationalize between these two philosophies?
See, Naresh, being contrarian all the time is fatal actually.
All right.
Because you are going against the wave. You'll get swept away, you know. There are some people, I know one guy, he's lost so much money now, he's gone to some village and all that. Because whatever happens, he says, becho. If there's too much buying, becho. Everybody says you buy. No. But you look at the trend, you know, when you're at the trends, at the extremes, nobody knows the exact top or exact bottom. But generally you will know the buying zone or selling zone. So at that zone, if you are a contrarian, you know, you will make a lot of money. And you may have to wait. Sometimes you also will suffer also, you know, because you can't, suppose if you bought a share and it goes up irrationally, you can't hold somebody's hands and say, look, don't buy, it's bad, like that. You know, they want to buy, so it will go up after you sell also.
True.
So that is basically contrarian thing. But sometimes also selling has helped also, you know, like you take for example Bosch. Now from 1980s, I used to go to Bangalore with Kisan Choksi and my uncle, and we used to visit the Bosch AGM. After the AGM, we have seen the plant also a couple of times. And it's one of the best companies in the world. Those days and even now. Okay, even today it's the best auto ancillary company in the world. But the price kept on going up and up and up. And finally, cost 20,000. So Chinmay and I, we were looking at our holdings, you know, because we had bought some 10 share, 20 share. Every time we used to go to AGM, I'll buy some shares. Chalo, ye acha hai. We'll buy it and keep it. You will not lose money in this. So we collected so many shares in that, and 20,000 was far beyond our imagination. Even 15, 16,000 itself, we found it is overpriced. For some reason, we didn't sell at that time. So from 20, we started selling. Slowly, because it's the best of the best companies. You are possessive. You don't want to sell all together, no? So it's slow, and you made so much money in the company. So slowly, we sold at 20, 21, 22. Finally, it reached 28,000. We completely sold out. We just left 5% of the shares. And that time, the market cap of the company was 80,000. So Chinmay, you know, he said that, okay, there are 6 Bosch companies. One of the companies and the market cap is so high. So we said, okay, we'll sell. And there's only good selling I've done in my whole career. The price after 8 years is also less. Otherwise, anything that I have sold, they've all gone.
So that also, I think, is a testimony of the kind of companies you bought. So that it keeps going up even after you sell. But understood. So I want to come to a long-term thinking. So Charlie Munger says big money is made not in buying or in selling, but in waiting and holding. So again, my own experience is that let's say war or a demon or anything happens, we look at which are let's get out and sell and raise some cash. So, for example, the TVS Group company, I've seen you're holding more than 2% of the company for probably 15 years. What's the framework which made you hold on in spite of, and it's come, as I've seen, it has bounced back stronger after every challenge. So what makes you hold on to those winners in the face of major challenges which look imminent?
See, one of the most honest groups, in my opinion, in the country, if you have to rank top 3 groups, TVS Group is one such group. Okay, Sundaram Finance, Sundaram Fasteners, Sundaram Clayton, they've all rewarded the shareholders so much, and they're technologically very, very strong. You know, anybody who comes to a plant of Sundaram Clayton or Sundaram Fasteners becomes his client. He doesn't want to then go to anybody else. Second thing is, you know, they were slowly, they were one of the first groups to export also. So, am I audible?
Yeah, now it's
Because some echo is coming. So they are also one of the first to export. They were the first to start radiator cap plant and all that. And the quality was so good that, they've been getting General Motors award, every year supplier of the supplier award they used to get. All their plants have Deming award and all that. So everybody is happy, shareholder is happy and customer is happy. Employees are so happy, you will not believe. The employees, they even don't talk about, chairman doesn't talk about his compensation. Only employees, they decide. They say, okay, I think we'll go for this increment this year, not more. Once some unexpected holidays were there, the employees decided that we will work this time on this Saturday also. 3 Saturdays we'll work to compensate those 3 days loss. So this kind of commitment when you see in the employees, and when you see this kind of management's attitude to employees. So these are all the strong attributes that, we said, okay, this company is temporarily it may go up or down, but eventually there are good companies good businesses and good managements and good companies to stay on. These days it's a problem of plenty, but those days there were a lot of lorry strikes and all that. But a lorry going to a particular cement company, the lorry driver has a choice which cement company to go. He'll prefer only this cement company because I'm going there. I get a very nice resting area for 3-4 hours. I get very good meals and all that. They take good care of us. So all these things you will know when you visit the companies and visit the factories and all that.
So if they take care of the customers and employees and vendors, then I'm sure the shareholder gets taken care on its own.
Yeah.
Interesting. So I want to come to compounding. Einstein said that compounding is the 8th wonder of the world, and we have seen it in Kaggering, how it helps in wealth building. Does compounding also work in knowledge and in human connections as far as investing sphere is concerned? Do you think?
Certainly.
So
certainly it works. If you are going to, your knowledge is, if you are going to keep spreading the knowledge, exchanging the knowledge with people, you definitely do much, much better. In the same way, as far as meeting people is concerned, the stock market, the new entrants, you should meet as many people as possible. You should visit as many factories as possible. Listen to everybody, but do what you want to do. You do your full homework and then you do what you want to do. So that is where the compounding works.
Interesting. Everybody makes mistakes. I'm sure you made very few in the course of your investing career, but are there anything which come to your mind, and have you learnt anything from it, and how has it shaped your own growth by fixing those mistakes along the way?
The mistakes that I made, like you have a hall of fame, no? There'll be a wall of shame. There are so many mistakes people make, and people are bound to make mistakes. Somebody says that in the last 45 years, 42 years, I have not made a single mistake. He's lying. Mistakes are bound to happen because this is such a very dynamic and active, investing is a very active process, so mistakes you make. But you should not make mistakes which are blunders, which will take you out of the market completely. So if I have to list down, I can list down 25, but I'll list down 1 or 2 or 3 maybe. So the first mistake I did, I short sold Ingersoll Rand in those days. There was a Badla system in Bombay. So one of the executives was our client and he sold his shares. So, and he bought Colgate with that money. So I didn't bother to analyze, but because he has sold, it is bad. So I also sold. And this is an example for all the youngsters. Don't listen to people and immediately come to a judgment, So I also sold, I short sold that, and then I lost very heavily. Then I decided that I will not short sell any time in life. Because when you sell, you can even lose infinity. When you buy only, you lose the cost of what you have paid for. The other mistake I did, it's a very silly mistake, but Infosys public issue was happening. So I had gone to Bombay to attend the IPO meeting. And after that, that time, Mr. Manek Bansali, Vallabh Bansali's brother, INAM had managed the issue. So he gave me one form for 500 shares. Fill it up don't have to, you get the shares, you don't have to sell for 1 year or something. I came happily. Issue was at 95 rupees. So I filled up, I was about to submit it. That evening, Vinod Sethi came. Vinod Sethi was...
The Capital Group...
he was, no, Morgan Stanley.
Morgan Stanley.
He was like God. Even now, he's a great investor and he's a great guy. I didn't know him very well, but he invited a couple of brokers, including me, 4 or 5 of us in Park Sheraton. And as we were having dinner, suddenly a phone call came. Infosys issue is bombed. He was so happy. Those days no cell phone. So he attended the phone. Infosys issue is bombed. Oh, so happy. He looked very happy. And I didn't have the courage to ask him, I have some shares, I'm going to apply the shares tomorrow. But you're so happy the issue is bombed. I didn't ask him anything. I quietly decided, which is a very wrong thing to do. I said, I will not apply. So I called up Mane Babu and said, I don't want. I'll send you the form back. Subsequently, I met Vinod and he told me that he had a deal with INAM and with the company that if issue bombs, all the unsubscribed portion, he will take it. Oh. So that is a big mistake. I mean, but okay, these mistakes are such that, you don't lose your shirt in that, but it's a kind of thing to learn that, don't get carried away. Very recently, about 10 years back, very recent for me is 10 years.
So that's the decadal experience coming.
So about 10, 15, I don't know when, TTK Prestige used to be 15 rupees. So we, Ashok Vishwanathan, friend of mine, and I, we started buying. Very, very cheap stock. And price went up quite a lot. It went up to 35, 40, 45, and then all Utpal and all Rakesh's team, they came, we discussed the company with them, they bought 1% of the shares.
Wow.
Because of their buying price went to 80, 90, 100. One friend of mine, he was in one of the group companies in TTK. He was also heading a group company. So I casually asked him, boss, how is this company? He said, I also bought some shares. Very good. Okay. I can't buy through you because we have our rules. But it's a very good company. After 160 became 200 in about 15 days.
Wow.
So again I met him because we had a lot of shares. All our clients had shares. So he said, look, I have sold off my shares. But the company is doing very well. I said, can you find out? I said, our policy is I can't ask the MD of TTK that tell me what your company is doing. I know everything. He has to tell you. But I'll give you a letter. You go to Bangalore, meet him. He will tell you, you are a long-term investor. He'll explain you the company and all that. I was lazy to go there. Okay. And my friend said, I have sold because I don't know anything about the stock market. I'm making a Europe trip with my wife. So he said, I'm very happy.
Is the friend heading another TTK?
He was heading another
TTK group company.
Group company. So he said that I'm happy. I made more than my annual salary, he said. So I'm content, I'm very happy. And see, I should have at least gone because reports were coming that they are doing very well. Our good friend Shyam is here or not, I don't know. Shyam also, he was also very strongly recommended.
Sir, I think held probably more than 1%.
Unfortunately, I didn't know him then. Otherwise, I would have not sold. But a lot of people told me not to sell. But then I said, no, this guy has sold his shares. He is not a fool. If he has sold, we should sell. So all the 145,000 shares or something, everything we sold off. Some 20,000 was in US, my son's name. I sent him some, he was doing PhD. It took some time for the papers to come and that got delayed. So I got some 350, 400 by the time it came. And we made all our clients also sell. In honest to this thing, that boss, it is good to sell. And after that, over years, it went to 9,000, 10,000 bucks. So this kind of mistakes, you have to do your work much. Very recently, we sold companies which we knew so well. Tube Investment, we sold at 800 rupees. It became 3,000 rupees now. Chinmay had worked for 2 years in the company also. It was long back.
Before this
Carnegie Mellon, this thing. So, mistakes are there, but only thing is you make mistakes. These are mistakes which are loss in profit. You should not make mistakes which will be so painful that you have to break your fixed deposits and you have to cut short your thing. That is one thing people should avoid, I feel.
Govind bhai, to make from 15 to 300, 400, anybody would be happy to make those mistakes.
Sorry. Other thing is, this is one problem. When a stock appreciates too fast, you are so much nervous. We are very nervous. We think, it can't be. When it goes up so steeply, because anything which is doubling in 3 years is good, and this is doubling in many times happening in a couple of years. So you want a reason to sell. You just don't want to do. No reasoning is required. You just want reason. Somebody says, okay, I'm happy, I sell. That's another mistake.
Very interesting. So there's a Greek mythology by the name Milo, where someone builds strength to lift an ox. First he lifts a calf, and then every day he lifts it and becomes strong enough to lift an ox. So as I see, like you've grown your portfolio, how many 100x or whatever, so it's a phenomenal growth. How have you built the mental capacity to handle? That's a problem I'm hoping a lot of us would face, that to handle increasingly large portfolios ourselves. Your portfolio is probably bigger than a lot of PMS schemes or mutual fund schemes. How have you built the mental strength and capacity to increasingly handle this larger portfolios?
See, by God's grace, the portfolios have gone up because of our luck and laziness both. Some of the shares we didn't sell and they've appreciated quite a lot. But yeah, once you reach a decent size and you have all your expenses met, all your emergency money is also there with you. Your son's education, your daughter's wedding, and everything has been taken. You have made that much money and still more. The additional money which you have put in good blue chip companies. At that time, your idea should be to protect the capital. Investing is preserving. It is not just making money at that stage. So you should also only invest where you will not lose. Okay, and if you have 20, 30 counters, somebody says buy this, you buy this, you buy this, then your focus is going on smaller things, So that is one thing you should avoid. So when you are going to do this, and at this higher level, you should only think of, first thing is protect the money, and second thing is see that you don't lose much, and third thing is look for 15% compounding. Let's say if 15, 20% certain compounding it appears, in bad markets so many opportunities come, everybody panics including us, nobody is spared. But if you look at something which is short going up, like Bajaj Finance came down from 10,000 or 8,000 to 1,800 during COVID, that kind of thing. So if you should look at only that kind of 15% compounding kind of thing, but make sure that you don't lose money. In the worst case, you can have a drawdown of 20, 30, 40%, but not
a
permanent, a big drawdown, because it's very nice when you make money, but it's very bad, much more bad when you lose money. So from higher level, if the whole thing crashes, because we realized that in 2008 we were not keeping any cash, so our portfolio came down from 100 to 20 or 25.
80% drawdown.
Market 75 to 80%. Market was not that bad, and all our shares were not that bad. Our shares were very good shares, very good companies, but very illiquid. So illiquid stock, there's no buyer. You are buying at this price, you take it. You name the price and you get the price. So having seen that, I think it is very essential if you have a bigger portfolio to keep cash. I think you have been doing it. I told Khannaji also, though he's my guru, I also told him that you should keep the cash always.
So is that your bear market buying power?
Yeah, I mean, see, in selling, what happens is people generally don't want to sell. They're very
possessive about our shares.
And also, after selling, the main question comes to somebody is, I have to immediately buy. I can't keep cash with me. Because everybody generally have seen, my money is lying waste. Why it should be lying waste? But sometimes that 10% cash which you have got, if a market crashes in a big way, you can deploy that money, like from COVID, some of the shares have gone 4-5 times. So keeping that 10%, we didn't deploy fully, we deployed only 70%. But that 5x, if it's going to give you overall, your keeping 10% has not harmed you.
In fact, it moves the entire
So
return.
we call it a very strong asset you create by selling stocks, called bear market buying power. So that is one thing, and we always do that.
Interesting. Coming to the current global uncertainty, so there is a lot of talk of inflation, global slowdown. There's a war going on. So how do you see that impacting Indian economy and Indian markets? How are you taking that in stride in terms of your investment philosophy and strategy?
I think next 1 year may be little uncertain for India also. But I think next 10 years, we are going to do extremely well. 5 to 10 years, I'm very, very sure about it. Our per capita income may go from $2,000 now to about $5,000 in 10 years. And most of the big countries, as of now, they are under recession. And they are going to be under recession. US, Europe, UK, Japan, all of them, Korea, everybody is in trouble. Mm-hmm. So a lot of manufacturing-led growth will come to India. A lot of, so many other sectors will do well.
So it's world plus one, China plus
one. Somebody was saying now it is not even China plus one. They are saying China is zero. Okay. We don't want China.
All right.
Because you invest in a country and you can't take out money, who is going to invest? So PLI scheme and all these things, government has done some fantastic work, but I hope everything goes in the same smooth way. The biggest joker in the pack is the next year election. We don't know. Otherwise, I think our exports are going to do very well in future, in times to come. And, now, main thing what has happened is in Europe, because of the gas problem, because of the war, Russia-Ukraine war, the gas is more given to the households. There's no much gas available to the industry. Not now, a couple of months back. So now some of the big companies, they are global leaders. They give everywhere in the world. So they have given the work to be done to countries like India.
The Indian subsidiaries.
Indian subsidiaries like SKF Bearing. Timken, they gave 2 products to be made in India, to be supplied to the whole world. So when these kind of people, this kind of thing come, and there are a lot of Indian companies, Bharat Forge, Sundaram Fasteners, a lot of subsidiaries of companies like Wapco, Bosch, they all get tremendous amount of work. And India. It will lead to a lot of, big development.
So it's like a structural India story, but with probably some hiccups due to these temporary challenges what we have.
Yeah, I mean, market valuation wise, it's not cheap today. And at least not cheap to our liking. I won't say it is a 100% sales zone, but it's not a
compelling buy zone.
Nowhere near compelling buy zone.
Got it. So in closing, if someone like, we have a young friend from Hyderabad, Alad, my friend's son, if he were to come and approach you, he's just a budding investor, probably 20 years of age, what advice would you give him because he's just starting off as a budding investor? What would you tell him?
Where is he?
Alad is here, yeah.
He and his colleague also, no?
Rishi, yeah. If both of you were to come.
Yeah, I must thank you guys, man. At the age of 20, you come to listen to a talk like this from your student age.
Not just
you go in the right age. And even my nephew also, Ram, he's of course older. He's an engineer and he's also come to India now. He's also an investor. So all these guys, if you go in the right way, there's a right age to invest. And I think you guys will do extremely well if you really don't go for very shortcuts. Okay, this is a very long game. Stock market investing is a very long game. First of all, primarily I will say everybody should be very humble in the market. Otherwise, stock market will humble anybody and everybody, We have seen in the past. I used to know Harshad Mehta personally very well.
Wow.
Okay. See the way the fall has happened, like lot of people, lot of big guys have fallen, like that. So you have to be humble in the market. Never think that, you can take the market, you can steer the market. market on the whole is much bigger than any individual. So that one thing you should keep it in mind. The second thing is you should do a lot of, you should try to learn, keep learning. Learning is a very active process. There's no end to it. Even if you are 65 or even if you are 80, I'm 65, my Guruji Kishan Bhai is 85. I stay with him when I go to Bombay. In the morning, he is up before me on the tea table. He's looking at the newspaper and he's underlining everything at the age of 85. And he told me, did you see this company's report came 2 days back in the Economic Times? I said, yeah. When I saw, no, are you sure? I said, I'll see it. Okay. Next day when I'm sitting on the table, that newspaper cutting is ready.
2-day-old paper.
2-day-old paper, he's kept it ready for me to read, you see. Today also he reads every day, one annual report he reads. And most of the annual general meetings he will attend physically. So learning is a very active process. You should never stop learning. So that is one very important thing in the market. And other than that, I think, you invest with a long-term view and, try to see that you don't, you may make mistakes. It's not that you don't make mistakes. You should also note down. I strongly recommend all of you, all youngsters, to read a book called Richer, Wiser, Happier by William Green. That book, it gives history of all the top investors in the world, what they have done what happened during war at that time. John Templeton, during war, he bought 104 stocks. It was such a pathetic situation, and he bought 104 different stocks for $100 each. And when the war ended, 98 out of 104 went up very steeply. So you should know all this, So history is also very important. And I don't know what else. Nothing is striking me now, but basically it's good that, you take interest. It's a very, very interesting field. See, if you're going to be working in a particular company, automobile company, you know about automobile. Okay. If you're working in a software company, you know about software. But if you are in a stock market investing, you know almost all the industries. You have access to all the industries, and you should also have the fire under the belly. You should really want to go more and more deep. And you're all quite fortunate that you have today internet is available. Anything and everything you can find out what is happening anywhere in the world like that. In those days, in the AGMs used to be, once we went to all the way from here to Bangalore. From Bangalore we took ambassador car, drove 4.5 hours to a place called Hindupur for a factory, LG tire factory, the annual general meeting. Because they don't speak, so we thought in the AGM they'll speak. And the chairman said, we are doing very well. You came all the way from Madras. What is that? Since you have come, please have your food, go and go. That was the those were the days, for AGMs. So now, do you have a lot of access? Also, one other important thing is that the market has become very, very broad now. In those days, it was not so much researched. Today the market is so very well researched that if you are going to invest in a company, you should have you should get in much before everybody else. The success in stock market investing is only you should be ahead of others. Either you buy ahead of others or you sell ahead of others. So if a company is going to give a bad result and one quarter is going to be bad, but you know that in the next 2-3 years it's going to do extremely well, then you start buying now, because when bad result comes you will not get shares. So that is one thing I forgot to tell you that. But I think India has got a very bright future, and only thing is you should have patience and you should have a lot of discipline to invest. You should have conviction. You should try to read as much as possible, try to meet as many people as possible, and also don't listen to anybody and act immediately. Don't be in a hurry to make quick money. You don't have to prove to your parents that you have made very big money, you are very fast like that, or your friends. You try to learn. That is what I advise children.
Thank you for listening in to today's podcast. Before you go, please subscribe to stay updated on your favorite podcast app.